Hello, Jim Sika here with Polaris Mortgage Planners at Axiom Mortgage Solutions. Today we are going to talk about credit. So it's May 1st, 2020, and credit history is one of the important factors when qualifying you for a mortgage. There's four things that the lenders look at. One is credit, one is income, one is down payment, and one is the property itself. So those are the four main things. When it comes to credit, it's kind of like if you're driving a vehicle and if you had a $300,000 vehicle that you wanted to lend to, and two different people wanted to borrow it from you, and one had driven a vehicle before, they'd driven vehicles for the last 5 years, and one had never driven a vehicle. So the one who had driven a vehicle, maybe they got in an accident a few years ago, maybe it was their fault, maybe it wasn't their fault, maybe they've learned their lesson, took some driver training. That person would be more likely the person you'd want to lend the vehicle to, because you at least know they know how to drive. You maybe have some reason to believe that they've learned their lesson if they had gotten in an accident or not. The person who's never driven, you don't know whether they can drive or not, right? So it's similar with lenders looking at somebody who they're going to lend money to for a house, $300,000 loan. They want to make sure you know how to handle your credit. The scores range from 300 to 900. 300 the lowest score, 900 is the highest score. People over 700 or so are doing well, and most best rates are available for people over 700 for a score, and you can also qualify for a little bit more money at that range, or at least over 680 anyway. So a few things that affect credit score: payment history, current amount of debt, your length of your history, new credit you've been applying for, and the types of credit you have. So with payment history, it's usually about 35% or so of your score. They have algorithms how they calculate all this stuff, so we don't really know exactly what's affecting your score and how to get, but we know certain things that affect it to help you get into a better position to be able to qualify. So with payment history, late payments are a big one. You want to pay all your bills on time. Phone bills, pay them on time. Credit cards, pay them at the statement date. The type of credit that you're paying and paying on time, like if you miss a payment on a credit card, credit cards change every month, how much your balance is in that, right? So the amount changes. And that compared to, let's say, a personal loan that is the same amount every month, and you miss that payment, the lenders actually find it worse if you've missed the payment on the personal loan that's exactly the same every month. Like, you should have set up an automatic payment, and it reflects a lot like a mortgage payment, right? So with a mortgage, it's the same every month typically, and so they start to worry if you have an installment loan, is what it's called, and it's a regular payment every month and you miss that. Compared to sometimes people do get behind on a credit card, they've borrowed just before Christmas, it gets quite high, they can't make their full payment on January, and they miss it, and or they went on holidays and forgot to pay it because they had to adjust how much it was going to be and didn't know. So sometimes there can be some story around that, and so it does affect your score. Make your payments on time when you can, and then also payment history on looking at collections. So if you've had collections in the past and you've settled that debt, you want to make sure that it's reported that it's been settled. Sometimes the credit company will settle the debt with you and it'll be paid, but they won't actually report to the bureau that it's now been paid and settled. You want to make sure that that's done so that it doesn't continue to hurt your score in the future. Your score starts to get better as you get further away from that debt and that collection. Current debt. So current debt's usually about 30% of your score. If you have a balance that's at your limit or over your limit, that hurts you quite a bit. Usually you want to keep your limits, if you're on a credit card and your credit card's at, your limit is 10 grand, if you can keep your score or your borrowing to below 65% of that limit, or even 50%, it's even better, then that won't hurt your score as much. If you have multiple cards, and I've seen some people where they have one maxed out and the other ones they haven't even used, it would have actually been better if they had evened it out a little bit more and kept all of them a little bit, like below 65% to 50% of the use instead of maxing out one, right? Especially if you're over the limit, then it really hurts your score. And that's a quick change. Like if you can get that one down below the 65% and let it report. So you have to let it cycle for 30 days until it reports again, because we never know exactly when any of those cards are reporting in a month. But once it reports again, it'll actually, your score will bump up, and we might be able to qualify you the next month for more money, or actually be able to qualify you depending on where your score is at. Length of history, typically about 15% weighting of your score. So how long you've had your credit cards or your personal lines or whatever you have, student loans, such. All of these with a little bit more history boosts your strength of your credit history and helps your score stay strong and not get as affected with little blips here and there. New credit, they're looking at the inquiries that you've been having, what kind of cards you've just got. So if you've just applied for like 3 cards and just got them, lenders for mortgages start to get a little bit hesitant. They just go, look, you just got a whole bunch of new credit. Why? What are you doing? And can you handle all this stuff? Because if you max all these things out, you're going to have a whole bunch more payments plus this mortgage. If you're going car shopping, you got to watch, because when they take your application, they'll fire that off to a bunch of different lenders who all pull your bureau, and it affects your score. So, be sure you find the car that you want and the price you want before you apply for the credit, if you're going to get a lease or you're going to get a loan from the car lot, just to kind of lower the amount of credit bureaus you're having that weekend when you're car shopping. Because some people will hit like 3 car lots and they'll get like 9 pulls in a weekend just from car shopping. So try and avoid that. Types of credit, it's about 10% of your score. Like I said, they're looking at the types of credit you have, like installment loans or revolving lines of credits, unsecured lines of credits, and secured lines of credits. That can affect us qualifying you. So when we're qualifying you for a mortgage, an unsecured line of credit, whatever your balance is, we got to put a 3% per month payment on that. Today, that's what the policies are. So that's like a 36% per year payment, which is very high. So 10 grand owing on a credit card is a $300 payment. And I did a calculation for somebody who got a car and got a car loan, and they had a $700 payment for that car loan. A $700 payment affected their qualifying by 100 grand. So they qualified for 100 grand less for a mortgage because they had a $700 car payment. So if you can actually buy a used car and pay cash for it for like 3 grand or 5 grand or what have you in a good shape, not only does it stop you from having an extra payment to have on your credit and affect you for qualifying for the mortgage, but a small enough value on a car, and you don't necessarily have to get collision on your insurance either, which also saves you a bunch of money every year. So I have another video covered on that. So with types of credit, that's unsecured line of credit, like I said, is a 3% per month payment. A secured line of credit that's secured to a house, we can amortize that payment out and put a smaller buffer rate on it, so then it actually ends up being a lower payment that we have to qualify you at. So it actually is better than unsecured lines of credits. And same with credit cards, we also have to put a 3% per month payment on a credit card. No matter what the minimum payment is, we have to put the 3% on there. So, and then make sure that, check your bureau, make sure there's not inaccurate data on your bureau. And there's 2 bureaus, main ones in Canada, TransUnion and Equifax. I typically use Equifax when pulling your bureau, because most of the lenders will accept the Equifax bureau. And you just want to make sure on these bureaus that people haven't got credit in your name and put it on your bureau. So I had a Walmart card that I'd never applied for that was on my bureau, and so I chatted with the bureaus and got them both to remove it, and then also had them put my phone number on my bureau, that if anybody applies for credit in my name, they have to call that phone number. So it calls my cell, I answer it. So I should be, if I'm applying for credit, I should be getting a phone call while I'm applying for it. Then I know that the system's working. And if someone else is applying for it, I'll get the phone call and say, that's not me, and then they'll stop that, right? So check your bureaus, look for inaccurate data, make sure that the things that have been paid off are reporting that they're paid off. Make sure that your payments all look how they should look on your bureau. If you've settled on a collection, make sure it shows that it's been settled or been paid. And That should help you out with your credit. So make sure you pay on time. Keep your limits below 65% or 50% if you can, or pay it off right to zero every month. Choose your credit wisely, what you're getting. Make sure that you're not applying for credit here and there and having people pull your bureau a whole bunch of times on the weekend. Keep your eye on your credit. Always review it every once in a while just to make sure that everything that's showing on there is right. And if you have any questions, you can always reach out to me and I would be happy to help. All right, Jim Seacat with Polaris Mortgage Planners at Axiom Mortgage Solutions. Take care. Have a great one.